if you procure components from third parties, you have to deal with what they have developed. And it's rather inefficient if you want to optimize the whole architecture of the spacecraft, because you have to open the schematics, you have to optimize, you have to remove some bits, compress, host software on one CPU instead of 5. But then to do, you need to have access to the source code. So there's a lot of optimization that you cannot just do if you procure things, because the supplier will not allow you to do that.
Welcome to Rockets and Radars, where we share honest conversations with Europe's boldest space founders. I'm your host Martin, and today we are diving into one of Europe's fastest growing space success stories. We are sitting down with Benoît Deper, founder and CEO of Aerospacelab, a company that's redefining satellite manufacturing in Europe. From his early days working alongside founders of Planet at NASA Ames, to building a company that just launched 4 satellites in a single mission, Benoît's journey is fascinating. What started in 2017 had exploded into a powerhouse with more than 350 employees, 8 successful satellite launches, and a bold vision to produce 500 satellites per year by 2026. Instead of following the traditional space industry playbook, Benoît and his team took the unconventional path of vertical integration, building everything in-house from day one. In this episode, Benoît shares the raw story of scaling a space company while maintaining its startup culture, the challenges of rapid growth, and why he chose to build Aerospacelab in Belgium and not in the US. Whether you are a technical founder trying to reach growth or just passionate about space, you're about to hear some invaluable insights about building hardware in Europe. Enjoy.
We choose to go to the moon in this decade and do the other things, not because they are easy, but because they are hard.
Very nice to meet you. I'm so excited to have you on this podcast. For our listeners, if you have any drink again, coffee or beer or water, anything that makes you comfortable, feel free to grab it now. This is going to be a very chilled, informal conversation, I hope so. So, let's get into it. For our listeners who might not be familiar with Aerospacelab, could you give us a quick overview of what your company does in the space industry? By the way, I love your slogan. Aerospacelab is your partner from objective to orbit. I love it. Easy to say.
Yeah, but the slogan is basically summarizing what we are doing. So we design, we build, and we operate spacecrafts. And usually, customers walk in saying, I want to do this or that. And then we put together like resources to get it done. There are some companies doing that as well, but we are kind of the only one to be that stubborn in terms of vertical integration. So we build not only the satellite, but everything that goes in it. We do that in-house. We don't procure much, if any at all, from suppliers, apart from raw materials and electronic parts. But everything is built in-house. So that's a bit what we do.
What is your main target group? Probably you have more clusters of customers, but who is your most valuable customer?
I mean, it's a good one because the space market is still emerging, I would say. If you look at the history of space, it was military-driven and then governmental, civil and defense. And until like 2010-ish, it was still mostly governmentally driven. And then there was the first batch of companies going out there, like claiming that the new space stuff was happening, meaning that the commercial market would take over. We see some uptick in the commercial side, but it's still super small compared to the governmental side of things. So customers on our side, it ranges from university spin-offs of 5 people that just raised their seed or Series A, and they want a first satellite to demonstrate everyone is working, up to large MODs. Yeah, so we have everything in between.
Just out of curiosity, how do you see the space industry going from now on in the next 10 years?
I guess it has to change because the way we build spacecraft and satellites in general since, I would say, 50, 60 years, it's not relevant anymore. So if you look back at the early days of the space stuff, you needed a lot of people to work on a lot of things because it was really hard. Like if you had to do, I don't know, some onboard computer to compute trajectories or controller to keep the attitude of the spacecraft in the right direction. I mean, I can't do that with other computers anymore. You needed like, I don't know, hundreds of people just to get a very crude equivalent of computer set up, design, programmed. The tools were not friendly. No simulation tool, no CAD, no CNCs, no 3D printers. So back then you needed like, I don't know, 100,000 people just to put a space program together. It was super expensive. And so we faced that complexity with the systems engineering, basically. So you have a lot of processes in place and an organization that's highly hierarchical with an agency mandating a prime contractor to do something. And this prime contractor is subcontracting to a lot of other entities because they needed to spread and distribute the workload because of the manpower issue, basically. But this, if you look at agencies like big ones, NASA, European Space Agency, if you look at prime contractors, Airbus, Thales, and the others, they are still structured in that way. And it doesn't make any sense anymore because now you can do the job of 100 people with one if you have the right tools. You get an FPGA and you get a metallic 3D printer and some CAD software. So this reduction of this implication of engineering power translated into small structure being able to tackle large missions. But the whole ecosystem is still split between maintaining jobs and having jobs programs. I mean, Boeing is a good example of that, Airbus and Thales as well, at the expense of efficiency and the ultimate price for the spacecraft. But I would say nobody cares really because it's government putting money into government program to keep jobs for government kind of thing. And then at the same time, the private space stuff, we demonstrate not only us, but our competitors as well, that we can do that with for 100x cheaper. And now we are at the tipping point where I believe that, we collectively have to do more with less resources in all domains. And so I don't see the old way of doing space stuff surviving more than 5-10 years. And then everybody will be on the new way of doing space stuff.
Do you think that space agencies will evolve over time based on this new trend? Like, I spoke to a founder last week that launched a satellite with a team of 3, right? So it's crazy what you can do with the lean approach. And also, I'm very curious, do you know any agency already that has changed their operations to get into this new way of working, a new way of releasing products?
It's a fascinating topic because I have worked for agencies and especially the European Space Agency before. So first of all, there is an old dichotomy where new space people are bashing space agencies, saying those guys are slow, expensive, and lame. And it's partially true. But if you zoom in, you look into the people working in those agencies, and most of them they know what they're doing, and they are energetic and enthusiastic, but the whole governance is upside down. And then I have Jean-Jacques Dordain, is a good friend of mine. He's the former director general at ESA. And it's a topic I like to address with him every now and then when we have lunch together. It's the ESA governance, for instance, but NASA has the same issue, with just the packaging is a bit different. Ultimately boils down to the member states. Member states are putting money at ESA and they exchange, they want something in return, mainly jobs in their own country. And once you start with this, what we call the geo-return rule, it complexifies the way you allocate workload to companies because you have to take into account the wishes of all the member states. And there is really no efficient way to do without that because they tried before. And if you don't guarantee countries that they will get something back, they don't invest in space programs. So all space agencies, I believe, are stuck in this inertia. And it's very tough for them to be reformed. But new ones, it's quite funny when you look at what's happening in the Middle East. Don't need to go that far, like Luxembourg Space Agency as well. It's a kind of new space agencies. I mean, they are like 10 years old. So they were built with a new set of rules to try to be more aligned with new ways of doing space stuff.
Regarding agencies, let's get into your story and the story of Aerospacelab. First, you worked with NASA and ESA, as you mentioned, early in your career. By the way, you're one of the guests that have been in space for your whole life, and that's super amazing to see. And anyway, what inspired to leave the comfort of space agencies and start your own company in the end of the day?
I was bored, as simple as that. I mean, my time at NASA was pretty exciting because I was in a lab that was not, I mean, we were within NASA side with NASA badges and NASA email addresses, but it was kind of a fringe lab in the sense that we were outside of the NASA regular processes for doing spacecraft. And it was super fun. It was made possible by General Pete Worden, that was the head of NASA Ames back then. And he created a whole space for experimenting. And the funny thing is that if I remember correctly, about the same time frame, like 2009, 2011-ish at Ames, we bump into each other, we work together, we had beers together, whatever, with founders of Skybox, Planet, Satellogic, Spire, and I'm forgetting like 4, 5, 6, but all the new space companies that are quite sizable now were involved one way or another, the founders or whatever, in this time-space bubble at Ames. So it was funny. But then I entered the European Space Agency. It was a bit less funny because I went from this very wild, innovation-driven R&D safe space, I would say, at Ames, with people that were fueled by this entrepreneurship mindset, to being a civil servant, looking at institutional mission at ESA, that are really like amazing missions, but timelines like 10, 20 years before it flies. And yeah, it wasn't for me. It was too slow. Yeah.
Just to go back to NASA Ames, if you didn't meet those amazing folks that started new space companies, would it change your life trajectory, or did you always wanted to become a founder in the end of the day?
In Belgium and in Europe in general, we are pretty good at producing, I believe, pretty decent engineers and technical people, but we're also pretty decent at crafting them to be good middle managers in big companies. So I was raised academically to become, this kind of entry-level engineer that would evolve into mid-management. And I ended up at Ames. It was really like, I learned more on the non-technical side than technical side. I'm pretty sure that if I was not involved in this, I would have not founded my own company. I would be, somewhere at Airbus or Thales dealing with regular satellites.
Just a thought-provoking thought, how we could reproduce this in Europe. I know that we might not follow the same trajectory as NASA Ames, but is there any way how we can spark this new generation of founders? The more founders we have in the industry, the better, the bigger the competition, right? The bigger the dreams and the more money that flows into the industry in the end of the.
Since it's a tough one, I guess many people have thought about it, and no easy solution is online. But I do see that we do see now wannabe founders in Europe going into the US for a couple of years, trying to learn from the best there and then coming back. The issue we have is that some of them are not coming back and they stay there.
Okay, that's another discussion for longer, I think. Okay, we get to the story, the part where you've been working with ESA and everything was moving very slowly. In December 2017, you founded Aerospacelab. Walk us through the moments that led you to that decision to create the company.
So in between the European Space Agency and the founding of Aerospacelab, I worked on hypersonics UAV in Switzerland in between. And the project I was working on was heavily sponsored by the Defense Department of a couple of countries. And they just pulled the plug at some point because they changed their mind about the usefulness of hypersonic drones. I was heading that project, and it was fine. It was super fun for 4 years. We learned a lot. And then I ended up applying for an MBA. And I was like, I'm 30. My friends are doing MBAs. I don't know what I'm doing next. And those few months between the end of my employment and the MBA, I was there like, what was really fun was what we did at Ames. So building satellites fast and in an agile way. So I'm like, let's set up a company that would do what was fun. I knew that I was getting into this for the wrong reasons. Wrong reasons being I'm bored, I have time, and I like to do satellites. And this is not a business plan. And I would rather take a commercial take, but I'm not sure there is any space company business plan that is working or that any other purpose than getting VC money. But anyway, the business school time was like, tell me about like fundraising, how to make the stuff a bit more robust. And this is how it started.
What is interesting question I want to ask here is that you already experienced how is it to be in the industry in the US. It's a different ball game. Why did you choose to base Aerospacelab in Belgium? And like many founders, if they would experience the US, as you said, they didn't come back. Why did you didn't come back to the US as the others?
The funny thing is that although I'm Belgian, it's the first time I work in Belgium. So I worked in a few countries before, and there was a real question. I was based in Switzerland. I was like, okay, where do I land for this project? And I got some quantitative benchmarks ongoing between different locations, and then was winning, and primarily by their incentives to R&D, which are like at least 2x better than the neighboring countries. And this is fact-based. This is quantifiable data. And then you have Europe in general is quite efficient in terms of quality of engineers with respect to the total cost bear by the company. Now we have people in the US and average is 3x more expensive for the same profile. So if we spent 100 million-ish on R&D for the first 5 years, to do so in the US would have been 10x more expensive. Why? Because 3x difference of salary packages and total cost of bear by the employer. And then we have a lot of incentives for R&D through ESA or national programs, where in the end we get, 60, 70% co-funding rate. So if you compound those two, it's almost 9x of cost edge respect to engineering hours. And this is why we are destroying the competition on price, because we do that on cost and we still do pretty good margins.
Okay, awesome. Let's go to the very beginning of the founding of the company. So in December 2017, you founded the company with a goal to do something fun. How did you come from that point?
Company's goal back then was to basically do what I was accustomed with in California, which is basically cheap, massive remote sensing constellations, to do a bit like Planet was doing. Because we were former colleagues at NASA, and then it was 5 years after my time at Ames. I was looking at, is there any other company doing what Planet is doing? The answer was no, especially not in Europe. So I was like, okay, there's maybe some room to do a Planet-like company in Europe. And I know part of the recipe because I was there before. Same NASA lab, having the same trade-offs about how to perform remote sensing with a very wide constellation of very cheap satellites. So we started doing this and doing some kind of comparative assessment of what we believe could be improved on the Planet technology stack. Yeah, but then after I would say 1 year, it completely went off rails and yeah.
What do you mean by off rates?
It's really not a good plan to do a copycat of a US company in general in Europe because there are many reasons, but the main one is that the initial conditions are not the same. Planet early days, I don't know the exact numbers, but they are public, so it can be cross-checked. Gut feeling is that they raised 500 million to get where they are, at least with the SPAC and the rounds. Getting 500 million of VC money or growth funds or PE in Europe, pre-revenue on this kind of deal, never been done yet. Maybe in AI, but not in space. So the whole model we could not copy-paste the model. And then at the same time, the remote sensing market proved to be a tough one. It's quite small compared to telecoms and hardware services. And it's really the cost of acquisition for customers is really tough. You have usually a few big defense customers, but you have to go through the door with lobbyists and you fight against the big primes. Or you get 1,000 customers that are spending 1K per year and that you have to entertain. So it's really not obvious. And if you look at the numbers of Planet, Black Skies, and all the other ones that are public, they are hurting. And so it hurts any company that wants to enter that space because VCs are looking at competitors, more advanced ones. And so we had this on one hand, and on the other hand, the hardware we were building for ourselves started to experience some traction for third parties. So people were knocking at the door saying this satellite or this component, why do you do that? I'm like, for my satellites. They're like, yeah, but are you selling those? And no. And then after 6 months, maybe, and now it's the bulk of our revenues.
That's an interesting view there. By the way, regarding the manufacturing part, you decided to build everything in-house from day one. I haven't heard that one before in Europe. What drove you that decision? That's a big, bold move to make.
The risk of going that route is crazy. The risk of being spread too thin and but there is no other way. If you look at the supply chain of space components, it's broken, basically. It's expensive. A lot of stuff is very low quality and not working in space, but you get buried under a pile of NDA even before buying the component to make sure that you cannot disclose that. And having dealt with suppliers before in agencies or in other ventures, I knew that from within. And then, so this is on the pure procurement side of things, but then there is also a more system optimization kind of aspects that if you procure components from third parties, you have to deal with what they have developed. And it's rather inefficient if you want to optimize the whole architecture of the spacecraft. I'm taking an example that is looping back to the agencies and the whole ecosystem being shaped in the way it is in the old space domain. Back in the days, you had radios and you had people doing digital electronics on the other end. It was two set of companies, two set of experts with the agencies, and in your satellite, you have two boxes and some wires in between. Now, with software-defined radios that are not that new, it's been 20 years they are out there, agencies are still lost because where do you put that? Do you put that in the radio section of the agency or the microelectronics section because it's FPGAs based? The answer is like, it's a bit of both. So you should like merge the two entities. And then on the company side of things, you have like very old companies that are doing radio since the 50s. They don't get a clue of what the FPGA is. And the FPGA people, they are still not there on the radio side. Now it's quite obvious for everyone that everybody uses software-defined radio, but there was this 10 years, 20 years path where if you wanted to build your own satellite, you had none on the market because agencies were not procuring that because nobody within the agency was with the responsibility of dealing with that. And this is a very simple example, but now we are pushing to have like all the avionics of satellites being built into one PCB assembly. But to do so, we need to master the IP of 10 equivalent suppliers because you have to open the schematics, you have to optimize, you have to remove some bits, compress, host software on one CPU instead of 5. But then to do so, you need to have access to the source code. So there's a lot of optimization that you cannot just do if you procure things because the supplier will not allow you to do that.
It's a no-brainer if you describe it like that. Why do you think majority of new companies choose the path of outsourcing?
It's a fascinating one, and I'm pretty sure it's a self-reinforced bad decision. Founders are quite afraid of leaping this because, I mean, it's scary. You are competing against suppliers that are, for some of them, there are a few hundred people working on 2 products, and in-house we develop 20 products, and we are only 400 people. So it doesn't sound right. Then, on top of that, the board of directors and the VCs that invested early stage, especially in Europe, 95% of them are lacking vision, and they come from the software world. So they are very biased toward this mentality of saying, okay, you can start developing one of these 10 products, and then you get some traction, you get some sales, and then maybe in the future you can develop the second one, and so on and so on, sequentially. If you do it sequentially, you have 20 years ahead of you. You don't have any differentiator because your satellite is just like the other ones. And the price is not good, so you don't sell any, and you die 5 years down the line. Early stage VC lost his money. But it's self-inflicted wound. Like it's,
like the argument would be, but this is too high capex, right? We need to put a lot of capital for you to even develop anything. Like, what would be your argument on that?
We went with a big public-private partnerships with a clear framework that capex would be high, but it would be co-funded by state mechanisms, incentive of R&D and so on. So we could lower the capex between 50 and 70%, maybe, making it still high, but not that high.
Regarding capital and funding, in December 2018, you raised $4 million in early VC funding. Many founders struggle with fundraising in the very early stages, especially in space, and especially in Europe. What strategies work for you in attracting this funding round?
So, yeah, I mean, there were no real clear strategy on this. It was a fair bit of luck, but I have a good friend that is a career politician now. He was minister before. And he told me once that you need to have luck, but you need to be able to seize the opportunity and transform the luck into something that works for you. And in this case, the partner that was not partner back then of this firm reached out to me and said, like, we are scouting for deep tech ventures in Europe, and we have seen what was going on in the US, and you appeared on our radar as being close to the mindset we are looking for. In terms of deep tech space things, you got a first shot at it in the US, and let's talk. And then we talked, and then they triggered the investment. But to my knowledge, it's the only space company they did, but they did a fair bit of other deep tech companies. Yeah.
If you knew what you know now, how would you approach trying to get the first money in?
I would go with the same firm because they were really like visionaries. They were supportive in this crazy vertical integration thing from day one. They got it like instantly, that it was a different risk reward profile, but it was a very interesting one. And they followed us on, I guess, every round we did. So I was going to say, if going back on the theory of fundraising, I would say it's rather easy to get the seed round done or the Series A, but it's just a matter of getting the right funds with you that you can share a long-term vision and that would already pre-commit to the subsequent round, have long-term partners, not funds that would just do the seed and then be passive on your.
So now you raised $4 million in early easy funding. How did you use that capital to get to the next milestone, which was the Series A? Just curious there. What were the key milestones that led you into the next round?
We started to do what we were saying we were doing. So we started the vertical integration thing. We developed a version 1 of all the subsystems that goes within a satellite. Not maybe all, like 80% we did in-house. And we put together in 6 months first satellite. That still is now, I believe, one of the fanciest CubeSat ever flown, because we had electric propulsion, laser comms, relatively medium resolution imagery. And it's still taking like pictures every day, what we launched 4 years ago. And this was really instrumental. The first milestone to get there. We landed a few contracts as well. We sold another of this CubeSat. We did only 2 like rather large CubeSats, so 20 kilos. And by the time we landed the contract, we were not even willing to do it, because we saw already that the CubeSat market was dying and that we needed to go higher in terms of volume and mass. But we was the first like commercial win. So
regarding contracts, how did you land your first one?
I was quite pushy. So I went to the European Space Agency and I told them that the satellite I was working on was like 6 years before. We could do it for 50x cheaper. And I went and I said that to my former colleagues, and they were like, come on, it's now. And so they said, let's give us like a small design study. And we already did some computations to show that it was within the order of magnitude of something feasible. And then they put us for the challenge, and then we demonstrated that indeed we launched it for 50x cheaper than the previous one.
And regarding cash flow and resources, financial resources, during this period from, let's call it seed, to Series A, how did you manage it to ensure being a sustainable business?
We went up to 100 people with no HR and no finance guys full time. And I'm still not convinced about CFOs and HRs in general, because as engineers and scientists, we are used to, boundary condition and doing control volumes and budgets, like energy going in and out of a system. It's quite obvious. So we managing the cash flow back then was pretty easy, because the whole company was pretty small, still is, but was 10x smaller. We had a pretty good understanding of what was happening by just intuitively having the numbers in our head. So we knew what was the runway without even having to look at the numbers, because we had, 2-3 contracts, and the payroll was like, 20 people. So with rough approximation, we knew where we were, and we knew how to, push down some resources or accelerate. And really, the growth of the company was one of the key challenges. We lost for like 1 year or so this ability to really feel what was going on within the company, because we grew a bit fast. And now we get that again with the help of the ERP and MRP, because we digitalized everything. And so now everything is back on track to be fully data driven. So we get back to this first order principle management, but with a big company, which was a fair bit of a challenge.
Fascinating. Regarding employees, you grew pretty quickly in the early stages. How did you approach finding your first 10 employees? And when did you start to look for them?
The first 6 were former friends and colleagues, and I briefed them about my wish to start a space startup 1 year before the kickoff. And I told them, like, stay where you are, because you have pretty good jobs within the industry. I know you are bored. I know that you are frustrated and not exploited to the full extent of your skills. We worked together in the past, so if you wish to come, it would be nice. And all 6 answered the call. And so I secured the first business angel money. And I told them, like, now I have enough money for 18 months of runway, free to assess your own personal situation and the risk profile. And most of them are 3 months notice period from the former employee. And they all started 1st of March 2018.
You mentioned an angel round. Was it before you got the $4 million or euros, or was it? Oh, okay,
Yes.
okay.
Yes.
How did you land that one?
Yeah, I spent 1 year to find the right business angels, and in the end, it was wealthy families in Belgium and in Switzerland that I reached out to. I didn't know any of them, but I knew people that knew them. And yeah, it took a lot of convincing because, I mean, what I was pitching was a bit crazy, but at the same time, no one was really expert in the field, but the ticket size were quite low compared to their net worth. So in the end, it was for them, do I buy another Porsche? But I have like 20 of those already. Yeah, to put a ticket in this
What
company.
did your pitch look like back then when you pitched to them? One last question I'm very curious about. You mentioned you don't like the classical structure where HR takes over the hiring. How do you hire now?
It's a good one. We are now, as we did like 2-3 years ago, which is way better. So we are structured in a way that is very distributed. So you have teams working on products and they have full autonomy. Like they have their budget, short-term budget, and they can hire, they can fire, they can do whatever they want. They sort their own candidates because if you have like, again, you have like an FPGA engineer or I don't know, thermal engineer that is requesting some more support. Like you need a new colleague on top. The classical way of doing that, especially with big companies, is that some middle management guy quantify that it's missing 0.7 FTE, whatever. And then they have meetings over meetings to see with finance and blah, 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 when we are going to be able to allocate an hiring position to this gap. Then they ask the poor thermal guy or his manager to write the job description. Then it gets published. Then technical recruiters, internal or external, are chasing candidates by looking into LinkedIn and seeing similar profiles. Then you get a funnel. Then you get like interviews with 2-3 steps. And then basically you wake up and it's been 6 to 8 months. The guy is suffering because the process is super long. And in the end, you order a thermal engineer, you get, barista, because between technical recruiter and 20 meetings, they just don't understand. They can't understand exactly what's needed. So we said, let's do it backwards. The thermal engineer, usually if he's a bit experienced, and even if not, they know their peers. So they have read papers, they go to conferences, they have friends, former colleagues. So we're like, go and find it yourself. You know better. So they get back with candidates. And then we insist on HR not having interviews with them, because usually the HR coming back saying, yeah, we need to check the company culture fit. Like, no, let's engineers assess the other engineers, because they know if they would get along and if they are going to work together well. We don't need to ask them like what is their favorite animal or like 3 strengths or weaknesses and this kind of crap. Like, no. And then we have pay scale ranges and so on. And now we are working into getting this fully automatized.
Let's get into the money talk. In April 2019, you raised additional 11 million euros. This was a Series A funding round. I'm very curious, what changed your pitch in comparison with the previous round when you got 4 million euros?
I mean, it was crazy. It was like, we're going to put a few hundred satellites to do real-time monitoring of the world and big data. We're not so deep on AI, but back then it was like machine learning was all the rage. So yeah, but it was too Bay Area-esque for a European pitch. It was the same, but we achieved pretty decent milestones. 2019, we got a few more contracts, so I guess it was really based on the commercial traction that was starting.
And what type of investors have you got on board this time? You mentioned that the very first investor that supported you in the beginning also followed on this one. What about others?
Yeah. They followed, but we got also the Belgian sovereign fund as well. I didn't reach out to them because I didn't knew them before, and they were like, "Oh, comes we have this cool deep tech startup and we are not invited to invest. I'm like, okay, if you want to invest, let's discuss. And so they joined at that time. It's pretty good to have sovereign funds because they bring some long-term stability and also some long liquidity event opportunity for early stage.
And regarding the investor perspective, so what were the biggest concerns of the investor that you talked to during this round? And how did you address those challenges and hard questions that they ask you, if you remember?
The main concerns are always the same. The market is tough because if you look at competition and even our numbers back then, okay, it was the commercial traction was starting, but it's still not at the level where the whole ecosystem is pretending it is. Because when I see McKinsey slides saying like the space economy is going to be like 20,000 gazillion dollars in the next 5 years, I can get you the same slide that we're telling that 10 years ago, and pretty sure we didn't reach that target. So we always have to swim against the dominant trend that space is a huge market. It is not. So this is the first, I would say, challenge, because when VCs are opening data rooms, the non-space educated one are afraid looking at the metrics compared to SaaS companies mostly SaaS companies, because they distorted completely the investment landscape. And then the other one is really a vertical integration thing. It's not easy to be able to understand that it's just a different risk reward profile. And it's one that it's higher risk, but it's on the same Pareto curve. It's not that crazy if you look into it.
Fair enough. Okay, you got 11 million euros. What did you do with this money?
We launched a couple of satellites, because the launch were, back then we are procuring launches way earlier than what we do now. Right now we just WhatsApp SpaceX, hey, do you have some place left 6 months from now? And they're like, okay. But back then we are booking the launches like 2 years before. We invested we grew the company basically, because again, this vertical integration thing, to be legit, you have to double down, because if you don't develop your own product in a very fast way, you have the risk of having a lot of half-baked product you cannot trust for your missions. And so you get the worst of the two worlds, because you have like your own internal product that you cannot fly. And then at the same time, you have to buy components from third parties because you need to fly something. And this is like super expensive, super slow, really like the collapse of the vertical integration promise. So yeah, I guess that it was the first intake of a lot of engineers to really speed up the development of products from 19 to 21.
Okay, and regarding the satellite launches that you just mentioned, what was your very first launch? And I'm very curious if you can walk us through that day. How was it?
It was Transporter 2 with SpaceX. If I remember correctly, it was June 21. And the whole stuff was in a rush, but it's kind of what we do. So we had issues with the customs to get it in the US, because it was the first one. So we didn't tick the right boxes with the transport company that was bringing us there. So the customs opened the box and with knives, and they almost killed some solar panels by opening the box. So we had a lot of stress just before they integrated in the launcher. Then the launch was pushed a couple of times. So it was in the middle of the night, and we didn't get any signal with the first contact with the ground stations. So we were quite stressed, because you don't receive any telemetry. They're like, stuff, no signal, no power. And the most likely explanation, cameras or kind of thing, is that the satellite is dead. And we spent, 5 hours to try to connect to the satellites with people in Norway that are steering the antennas for us. And we could hear the people operating the antennas that are like, okay, we'll do one last sweep because you are nice guys, but the stuff is dead. Like they didn't tell it, that we could understand on their face that they were convinced the satellite was dead. And in the end, it was not dead. It was really working well, but the coordinates that were given to us by basically the Space Force, was the Space Force back then, were off, because their radars were off and the antenna was not pointing in the right direction. So it was a huge relief when we got the first packet, because the satellite was saying, okay, everything is nominal, and it was fine. Like, okay, but we went from pre-launch stress to nothing is working it's our first satellite. Everybody's looking to Indian
emotional roller coaster. Okay, so since the first launch of your first satellite, how long are we talking about until the next launch?
2 years. Why? Because we discarded the first one was a small one, 20 kilos. And then we said, now we stop this. We have still one to be delivered to the customer that was launched in October 23. But we focused all the resources to develop again the vertical integration thing, all the subsystems, but for 200 kilogram spacecraft. So we started again from scratch. And and the first one was launched in June 23.
How did you approach your pricing strategy in the very beginning, and how did it change over time? Many founders in the early stage, they are struggling to figure that out what should be the right price. What was your approach there?
We're still struggling, but it's short. It's a really tough, like, I read a couple of books on this because I don't know anything. I don't know anything, but I read 2 books. So I can write, I can do ghostwriting posts on LinkedIn, I guess now. But anyway, we can do like cost plus some commercial margin, and then this is our price. How we can do value-based, and we try to augment that with data points for competitors' pricing. But it's a really tough game because there are maybe 5-10 companies doing the same kind of satellites. Everything is under NDA. There's only a few companies that have the pricing structure is online. And we don't even believe it's the good one, because if you look at their pricing structure, a lot of stuff is not included. So we guess it's just to engagement with their customers, and then they try to crank up the prices once they talk to the customer. I'm working on the cost structure, so getting the cost down to extreme level of cost reductions by doing better designs. And the hot topic right now is mass manufacturing, because we do see that when you manufacture a lot of them, the price going 60-80% down. And then we are trying to find people that are knowledgeable about pricing, like how to get the right value-based pricing. And in the meantime, we just pop random prices within commercial margins that were clearly defined before. But it's clearly not optimal. I mean, and a lot of funders would disagree with me, but a lot of deep tech startups, if not all of them, are technology push company. And most of the people working in those, they only care about the tech and their products. And I'm trying to correct that bias, but I'm super biased myself.
No, there is some truth in that, but okay, fair enough. Thanks for calling it out. Okay, so after your Series A, are there any highlights of your journey that you would like to share in this period?
We developed products and we tested them on ground, so we showcase to customers and for future investors that although it was not in space yet, it was space qualified. And this was already like kind of a huge step forward. And then at the same time, backlog was spreading. I started with the non-binding letter of intent saying like, someday in the future, we'll get some satellites from you because you look cool, up to actual contracts, like saying, okay, if you can deliver this kind of performance, we'll buy 1, 2, 4 of them, few million a piece. So you start to see the backlog and the pipeline ramping up with good metrics. And really, a lot of them was not a hard commitment, but was soft commitment that they wanted to see one of the largest satellites in space before fully committing. So this is why we rushed the second one, this Grégoire, in June 23. And I mean, the sensors were not ready, so we just launched the satellite without any purpose other than just debugging the satellite itself. Any other like space agency or company would have waited 6 months or 1 year to get the sensor ready before launching it. We are like, now let's go, let's launch. And we launched 3 months after that, another one and another one to do this kind of iterative debugging in space. Yeah. And this was really like what it picked up in terms of commercial sales.
So far, amazing story. Okay, Series B. What were the key milestones, technical milestones in this case, I believe so, that convinced investors to come on board on this round?
So it was fun because we started to generate some interest from the big players. That was really the changing bit. So up to that point, the Airbuses, the Thales, and the others were not even looking at us. We are not on their radar. Yeah, yet another new space company is doing cubes that will die early in orbit. We don't mix with those guys. And we managed to find a way, and I guess now, and we then did some big contracts with them and others And it's partially due to the fact that we have a lot of engineers that are coming from their engineering offices as well. We kind of do high quality products, same quality as their products, but our cost structure is super low because we don't have their overheads. And they started to realize that basically they could rely on us for what they call commodities. So them, at least for some of them, satellite buses, commodities, and the sensor and the services are where they want to focus because higher margins and higher entry barrier in terms of R&D. So they were like, okay, if you can bring a satellite bus for cheaper than what we do internally, it gives us a competitive edge when we bid on big contracts. So we started to work with them, and it was really interesting to see a change in terms of perception from the big players looking down at us to invite us to the table and say, okay, maybe we can work together.
Do you think the incumbents in Europe should take a different mindset or different approach, how they look into other new space companies from very start of their inception?
Yeah, yes and no, because it's a broad landscape of new space companies. Many of them, I would not work with them because I don't trust their quality insurance or the design processes. And in the end, when you sell a satellite to a telecommunication operator, if you don't meet the SLA, they are pissed, they lose money, you lose money as well, you destroy your reputation. So I can understand that they are very demanding customers. Yeah, we kind of meet them halfway. We said, we have engineers that will work on your high quality, high reliability product for like 10 years. We do believe that we can simplify the design and refactor what you have been doing to get the same level of reliability or even more with a lower cost footprint. And this was really took us like 1-2 years to just exchange with them and convince them, because the senior technical expert within the primes or the incumbent companies, there's a lot of psychology involved because the guy is doing this since 40 years and you are kind of taking his core beliefs down to his very own usefulness. Like, yeah. And some of them were really happy. They saw us as building up on top of their legacy because we took their design and we optimized it. And some of them were really like fighting and pushing back against because of suppression, I would say.
It always comes down to pride and heritage, especially in older companies, right?
That is why, like, on pride and heritage, we have like better relationship with the 60 and 70 years old than the 30 or 50 years old within Airbus. And
one more thing, the present. Recently, you opened offices in Palo Alto in the US and a manufacturing facility in California. It looks like you are coming back to the US. Why expand to the US now?
It's the largest market by far. So we have to get there to, see some opportunities there. And we are chasing two things, commercial and governmental markets. We don't have very high expectation on the governmental market short term because we know it's tough to get in. But the products we have are quite good. So we have a lot of pull from the market there. I was very reluctant to set up a company in the US because I know that they are very, very proud of their industry and they like to buy it local. But we were invited to set up there. So let's see how it goes. We have our first satellite that is being assembled in the US right now, as we speak, for a commercial customer there. And we do see that on the commercial end, it's easier because commercial customers in the US, they only care about price and value ratio. They don't care too much about politics involved. Gov is another thing, but on the commercial thing, we do see that we have a few customers that have export control restricted payloads or components. So we do the satellite assembly in the US, where the US entity is cleared for doing that. And it's much more convenient than applying for the paperwork and wait 1 year to get cleared in Belgium to do this. So it's mainly what we're...
As you're saying, there are big differences between the US and the European markets, especially on the commercial side. Just to be practical here, what do you think the European space ecosystem, either on the commercial side or on the ESA, or governmental side, should do first to make the ecosystem much more convenient for the founder?
I mean, on the commercial side, we see that our customers that don't have money. That's the first one. And if you look at the European startups that we are talking to for them to buy satellites, funding is scarce for them, so it doesn't flow down to us as much as the US startups. So US startups are doing Series A in at least, I would say, 20 million upwards to 100 million. So they can afford a couple of satellites to demonstrate their product and their services. Series A, we have one customer that is, we work for them, but it's quite slow. And I feel them, and I mean, we try to support them in their journey, but their Series A was like 3.5 million. And yeah, so it takes time for them to come up with the demonstration of what they can do, only to get overtaken by some US company with inferior technology that will raise 30 million Series A, because they will get the momentum and stuff in space before them. And then it's kind of a market where the winners takes all. So yeah, access to this year, yeah, all the stages, because I hear sometimes like both stage, late stage is less available than seed and so on. We need to work on all the segments. I can testify that late stage is lacking for deep tech in Europe, but early stage, there are not many founders, not many VC. The ecosystem is pretty dry. Then on the governmental side of things, I mean, the market is super small, but it's also fragmented. If you look at the ESA budget, it's, I don't know, 1/5 of NASA's, but NASA is maybe like the 4th or 5th space agency by budget in the US. So Space Force and Aero and other agencies have budgets that are very large compared to NASA. And so you get a tiny bit of this, I would say 1/10 being nice of the US space budget. And actually, I believe it's way below that. But then it's fragmented over 27 member states. So it's spray and pray with grants and contracts that are like 50K. What do you do? I mean, yeah.
What do you think about the proposition built in Europe, raised in the United States?
I mean, that's what we are doing. We do R&D in Europe, and we do see a lot of commercial customers in the US. So we build some in Europe, we build some in the US. But I would say definitely develop in Europe and sell it.
Okay, good iteration there. Okay, let's talk about the future. In May 24, you broke ground to Charlois Mega Factory, and you aim for a production capacity up to 500 satellites per year by 2026. What is the strategic vision behind this ambitious idea, and how do you think you're going to achieve it?
The real estate part of things is ongoing, and the funny thing is that I was betting with the team on them being late, but they are not late, and even some would argue a bit in advance, so it's coming online pretty smoothly. Factory is quite huge, and at least the biggest one in Europe by far in this class of satellites. And we do anticipate like proliferation of low Earth orbit assets, say communication mainly, but also remote sensing. And we have to have this tool to tap into the large orders, the key accounts. Key accounts are ordering a few hundred to a few thousand satellites. And they are not, I mean, we talk to all of them because there are not many customers. I would say 10 in the world that are paying this. And out of the 10, maybe 5 are financed or are likely to be financed. But the replenish rate is like 3-5 years. So there's like a recurring business of this. There are not many companies that are gearing towards being able to supply those guys. And most of the question with them is really about like industrialization and our ability to deliver. Because telecom operators, I mean, any service operator, but especially telecom, it's big projects. So it's between 5 and 10 million capex on their side, not only satellites, but because the whole space segment, ground segment, launchers, they have to procure a lot of things. So they take a few years to get the funding right on their side. But then once they get the funding committed, they want the service to be operational like yesterday. So it's really detailed discussion about how we plan to be on time rather than satellite reliability or pricing. And even though it's fundamental, but it's funny to see that the industrialization and having the right factory is really what makes you win or lose this kind of content.
Now let's get more into the future, 2030 plus. How do you think Aerospacelab is going to do in that year? And also, I'm very curious, what are your predictions for the industry from the reality side of the things?
I would wish we do well. And by doing well, the low-hanging fruit is to take back the space that is going to be abandoned by Airbus and Thales, because it looks like they are divesting from space because of the cost structure. And I don't feel what's needed to come back with the right shape, because I'm pretty sure they have to die to be reborn, and we'll do. I mean, the plan is quite simple. It's like when they die, we just take their space and they don't get reborn. Like that would be short-term plan, and then leveraging also the fact that the agencies have to go through some transformation, and it's a bit like Airbus and Thales. I'm pretty sure European space agencies will change drastically, if not disappear in the next 5 to 10 years, because it's written in the wall. If you look at what do we call the ministerial conference, I don't know if you follow that, but every 3-4 years, ESA is setting up its budget. The one that is being prepared for end of 25 doesn't make any sense. So, and it shows because the member states are pissed off at ESA and if you look at the way agencies and especially ESA is working, it's a bit like, the LP being pissed at their JP kind of relationship. And we all know how it goes when the LPs are pissed. They don't commit to the new fund. And that's basically what's happening. We see the money flowing down to national agencies instead of the European one. So yeah, this complex dynamic is emerging. And pretty sure we are going to experience some kind of more private sector business being delegated to them instead of everything going fully public.
Okay, cool. Quick fire round questions. I'll ask you 3 questions, and if you can answer with 1 or 2 sentences, that would be awesome. So the first one, what would be the one piece of contrarian advice for other European space founders? By contrarian, I mean something that you believe that others don't.
I was going to say vertical integration, but for them, they should buy from us because we get the mass manufacturing right. So we get escape velocity. Nobody is going to get satellite cheaper than us. So don't do vertical integration because we did it already.
Good one. Okay. What is the most surprising due diligence question that you have got so far?
If I was doing drugs.
Interesting. And the next one would be, what would you tell your younger self now? If you could go to the past and talk with your young self.
Don't plan too much. Plans are, it was Clemenceau, I guess, French general or whatever, that said that plans are only good as long as the first shot was not fired.
Good one. Okay, and one bonus one. What would you tell a space agency scientist or engineer thinking of starting a company?
It's tough, and please do it for the right reasons, not because you are bored. And yeah. So surround yourself or ask yourself if you know enough of the thing you don't know.
Oh, that's hard. But good advice there. Okay, awesome. Amazing journey and story. Do you have any final thoughts for other early stage space founders in Europe?
Be very mindful about your time, because there's one thing we do well in Europe is to keep non-sustainable company alive, what I call zombie companies, because it's easy to survive with a few grants there and there, but everybody's losing. So usually when I see this, like space companies with 10 people doing that for 10 years, no real progress there. Founders and people involved in the company are quite brilliant, but everybody's losing. They're losing their time. They could be more successful doing something else because obviously it's not working. Public money is not well spent because we throw money at stuff that is not producing any value. VC capital is locked in and they are holding their bags on this. And it's a waste of brain time, waste of talent, waste of capital. So fail fast and bounce and find your niche. Don't be too stubborn. And I would say after 5 years, if you don't have any traction, just pull the plug yourself, because in Europe, the plug is going to stay there.
That's interesting perspective. Okay, cool. One more thing. So there's this tradition that we have on this podcast is that we create a challenge for the listeners until the next episode comes up. What would be your challenge or task for the listeners, early stage space founders? What they should do until the next week or 2?
I'll cut your meeting time by half first, and then the remaining meetings, do them by walking outside with the people you wanted to do meetings with.
And that wraps up our fascinating conversation with Benoît Deper from Aerospacelab. From his early days at NASA MS to building Europe's first satellite megafactory, his journey shows what's possible when you combine technical expertise with bold vision. The key takeaway, at least from my perspective from today's episode, would be sometimes you need to think big, really big, to actually make an impact, not just in the space industry, but overall. Benoît's decision to build everything in-house and scale to 500 satellites per year demonstrates the kind of ambitious thinking European space really needs. If you enjoyed this episode, make sure to follow Rockets and Radars on your favorite podcast platform. I try to release new conversations with space and defense founders every Friday. You can also follow Aerospacelab's journey as they continue building their mega factory. You can also find all other social links and a magic link to get an intro to Benoît in the description of this episode. Next week, we'll be back with another founder who is pushing the boundaries of what's possible in European space and defense. Until then, keep dreaming big and building bigger.